Okay. Yay! I think everything is covered now. It only took us 50 minutes. I am pleased enough. So, without further ado, I mean, you kind of got a chance to see me and Pastor Tati interact with one another. A good relationship that she and I have. And she has taught me a lot about bookkeeping and accounting. And I am super excited to get into this because this lady is filled with a wealth of knowledge. You may hear me refer to her as Pastor Tati. Is just a representation of her philanthropic side, but she is filled with facets and skills and intelligence. And I always remember when I was an undergrad, it was my international teachers that just knew it all. It wasn't a question you really couldn't come to them with and they couldn't answer. So I am super excited to introduce Tati Yadete, which is a accountant of plenty of years. I don't want to age her. She looks good. It's black don't cry. But I am super excited to have this conversation because as an entrepreneur myself, I knew that knowing and understanding taxes is one of the most dreadful times of the year, but also one of the most important. Not limited to it, including bookkeeping as important as well, but taxes, you don't want to mess that up. So I'm super happy to be able to host this conversation, and hopefully we get to answer all the questions that you as an entrepreneur, freelancer, solopreneur, business leader would have. So, without further ado, round of applause, Miss Tati Ade.
Thank you, Rebecca. That was a generous introduction. My name is Software Yadete. I go by Tatty. That is my nickname, but that's what everybody uses. Originally, as you can hear from my accent, originally I'm from Ethiopia, but I lived in the United States for almost 30 years now. So I am an accountant by profession. I got my bachelor's degree in accounting back home, and I did my master's here from you. And I have been working even back home after I graduated. I've been working as a accountant. And after I moved here, after I graduated, working as a controller. And also, I started my own business, accounting firm, and still working on that. So I do accounting and taxes and anything around that. So today I got the opportunity to go over, some important issues and some important things concerning taxes. Through the year, I met a lot of people who don't, who have been filing for a while, and they start their own business. They start, doing, uh, their taxes for a while, and they didn't know how to go back and be right with IRS because IRS doesn't give you a break if you don't pay your taxes. So we're going to talk about it.
Yes, absolutely. And again, thank you for being here, Pastor Tati. So let me just jump right into it, guys, because I know we had some issues this morning, and I know that, but we do have a list of questions that we're going to discuss. So we'll get right into it. And the first thing that we're going to talk about really are for the businesses that they are not registered. They're not registered as their business. They just have been making expenses on their businesses. So I was curious if you, Miss Tati, if you can talk about those businesses. What are ways that they can include their income and their expenses on their personal taxes if they are making business transactions, if they can even do that?
Well, it is good, it's advisable to register your businesses if you are doing your business. It's good to register with the Department of State so that you can get your EIN, your business identification number from IRS, and that will make it easy. But even if you don't register your business, it gives you a lot of options. You can register as sole proprietor, once you register it for 10 years, and you can also register as a legacy corporation, all kinds of things. And it's not hard. I don't know why a lot of businesses don't feel comfortable to go and register it, but that is the way to go as long as you do business. Even if you don't, register, still you can use your social security number and do the same thing as if you are registered. And there is a Schedule C that that's the Schedule C, which which lists the income and the expense, and you can file your business income or any other side income. Yeah, included with your 10 form.
Okay. So, can you talk a little bit about when, with these expenses and stuff like that, like the different credits and deductions that some of your clients often people don't come to you to file their taxes and then they do come to you afterwards. Do you often see that there are credits and deductions that they're missing?
Yeah, there are, you know, yes, there are so many things that people miss when they have like business, especially small businesses. There are so many things that they miss. To start with, when you start a business, there is a startup cost. You invest something in your business, you just cannot, start a business without spending some amount of money. Some of the businesses and the nature of the business requires to buy equipment, big stuff, and also money, your laptop, and everything that you invest at the beginning. That is called a startup cost. And that startup cost is not a big one. It lets you deduct $5,000 in the first business return. And if you buy like equipment, like if you are working with landscaping, maybe you buy the mower, all those big things, and you can deduct it every year by amortizing it, by dividing for up to 15 years. I think you can divide it and use that expense, to write off some of the income. But it's not everything that you spend, but like when you start, if you are investing on, if you are using marketing research or a person who advertise, or if you borrow money and can deduct the interest of up to $5,000, IRS lets you to deduct
Up to 5,000? Shoot, that's good money.
5,000.
Yeah.
Yeah, but you start, of course, your startup cost maybe more.
Yeah.
Maybe you didn't make money the first year and you didn't file your tax, maybe the second year, but you can still use that startup cost whenever you file.
Okay.
And that paid, for the big, like for machineries or any other big items, you can divide it like, you can depreciate it within 15 years and you can use it every year.
Wow.
That is up with the startup cost. Um, uh, Other than that, tax and interest, we are going through, what you should be aware and keep the file, keep the receipts all the year. So, taxes, interests, and charter contributions, you can deduct.
Yes.
So, like if you buy something and if you take it, if you buy it by your credit card, then there is interest on it. You can deduct that.
Wow.
And the charter contributions also be deducted. And payroll taxes, pay wages that you pay for the employees, and you know that you can deduct, you can offset. And even for yourself, instead of, if you are a small business owner, instead of drawing money from the business as owner draw, you can pay yourself like maybe half of the money that you are using the whole year as a payoff. By doing that, you are eliminating the self-employment tax. You can prepare payroll for yourself
Mm-hmm.
and send the payroll tax. Some of the customers, they may not pay. You may try to collect money, you did the service, or you sold the item, but for some reason they fail to pay you. That is a budget expense. You can deduct it. That is a deductible. And also, you also give money to others, by the name of from the business, and they will pay you back, and that's also included. And also only little, wastage. Those, just write a note. You may not be able to quantify all of them, but take a note and, write it down. At the end of the year, that's a loss, damage. That is, it adds up. And also we go over, very detail about home office.
Mm.
Some of you can use your home, one of your room, or a certain area for as an office, and because of that, you can deduct a lot of expenses, like the homeowner insurance, the utility, the property tax, repairs, a lot of things proportionally for that area. But there is a criteria. You cannot just, you know, take your laptop and work on, the dining table. That it doesn't work that way. It has to be exclusively for your business purpose, like doing administrative thing, doing planning thing, and you can use your home. Even if you have a shop, if you sell something, if you have a store, uh, you may not have a place to do administrative work. It could be one big work. So you can use your home and deduct for your business. And also education and training.
Mm.
You can join, go to college, take courses, and you can deduct that. But that training, that education has exclusively to do with your business. You
Right.
cannot take any course and deduct it. It's not like that. But you can do that. Marketing, people do, like for events, you may have a flyer, you may hire, somebody to go and distribute your flyers, and you pay them. Keep that, keep that receipt or write a note. That's deductible. Anything like advertising, public relations, website development, and email marketing, all those things are usually, the business owners, they don't pay attention. They don't keep it up.
Mm.
So
So what I hear is we as business owners, we leave a lot of money on the table.
Yeah, yeah.
Okay, so I know for a lot of business owners, they probably don't do these things because of that big fear of the A word, auditing. So,
Yes.
can you talk a little bit about some habits that, uh, or I mean, maybe from your personal experience of businesses, some mistakes that they've made that led to them being audited, and what we can do so that we don't get audited?
Well, yeah. Yeah. What it is to start, from the beginning, you have to file your taxes on time. You know, don't- not being late or, not filing for years. That is the big portion. Once you are late, if you haven't filed for a while, you are in target. But the biggest thing that triggers audit is, what people don't understand and not pay attention is income. The thing with the income is like everybody that do business with, they may send you 1099. They are required to send you 1099 as long as you did business over $600. So when they send the 1099 or the little or K1, then the company goes to actually the form goes to IRS. IRS has it, and they file it under, they put it under your social security. So when you file your tax return, that is what they compare with. They don't care to do that. IRS is behind on a lot of things, but they compare it when they file it. So you may not, you may not have even received, the 1099 maybe lost in the mail or something. So first target, the first one to be targeted for audit,
Wow.
And I have an incident. I remember this guy, he filed, whatever he, in 99 he has, he did a formal accounting. So he filed, innocently he filed what he felt like. That's the whole 1099 he got. But there was another organization which he did business with, and they were in trouble. They got in trouble with IRS, and they got audited. When they got audited, they found out that they were not sending 1099 to their vendors. So the IRS knew this business was doing, the business with the other one, but this one didn't file his 1099, his income, whether it's 1099 or not. You have to record your income and file a proper income on your tax return. So because of the audit that the other guy got, this one also was flagged and he got later. So, income is the first one. And also, when, like, improper, like when we do your account, your taxes, when you file your taxes, if it is not filed properly, if it is not categorized properly, you get flagged for audit. Mileage, people use like, their job is may not be given that, they don't need to go out from their office, and that they put big mileage to get a big deduction. That is also another problem, that they get flagged. And also investment income.
Restaurants?
Investment.
Oh, investment income.
They put aside, record the income,
So the biggest takeaway for business owners is sometimes you just can't do business with everybody. You people who are your vendors that they are keeping up with their records just as much as you. So that's a big bummer. That just like cut off a good number of people I could think even in my realm. So but I mean, that encourages us to get our books in order, our stuff in order. So I just want to do a quick shameless plug, guys, because Miss Tati does a lot of bookkeeping and accounting for a lot of small businesses, churches, nonprofits. And she has such a big heart. She offers her services for even the least of them. And, you know, if it comes down to where bookkeeping and accounting just gets too complicated or you're just worried that you're going to make a mistake, her office is open to you for accounting services. She isn't just limited to a tax accountant. She is also she does bookkeeping services, so she can manage your books on a day-to-day basis, monthly basis, and she also has experience in auditing herself, so she knows what is appropriate, what line items are appropriate to have, and the proper ways to write them, making sure that your books are balancing and you're journaling your entries the correct way according to the general accounting principles. What is it? GAP, general acceptable accounting principles. What is that?
Yeah. There is accounting, it has a standard that you have to keep.
Mm-hmm.
You know, you have to have. These are principles that you should go when you record your accounting, your finances, how you put your finances, and it is acceptable by you know, professionals, and not only professionals, by the government too. These are standards set by the American, you know, AIC, by American account certified public accountants. So that is a standard, that's the principle. When we do audit, we just check, is it according to that principle? Is it, done right? So that is the principle that we go by.
Awesome. So you heard it yourself. If you don't know that accounting language, don't risk it. Call Tatty Yadete at Atef and Associates Tax and Accounting. I'm going to make sure I get all her contact information and put it all in the comments below, in the description below. So please don't save yourself the hassle. All right, so let's move on to the next question. What are the penalties if you don't pass your audit? Since we're talking about audits, like if I just ignore them, is it like jury duty? Like, am I gonna go to jail? All right, so let's move on to the next question.
No, well, to start with, you get audited because something is wrong. That IRS doesn't accept it. So what they do is, there are steps that you should do. You need to find, if you get audited and your audit is qualified, they say this is wrong, this is wrong, this is wrong. It's better to find a professional to do it. And what you have to do is you have to make, you have to make a correction. The correction is amended. They make you to amend the tax return. You have to do it again, including all the years, maybe years, maybe 1 year. So you have to do a correct one. And the problem with IRS is, they assess penalties, interest, and the compound interest, for all those years. So you have to do it on time, whatever they require. and do it correctly, and also, pay on time. If you cannot pay, like sometimes it is a big amount, they say 56,000, 80,000. So, you can also negotiate with IRS, why that happened, or how you can pay on installment base. Sometimes, they compromise and they reduce the amount that you pay. And sometimes, if there is a big problem, that's why you didn't do it, there may be even a chance that you pay really less than what they asked. But what you need to do is to deal with it immediately, not to put it off. It's not going to go away. It's going to work.
Got
So
you.
deal with it, yeah.
Okay, so
And also the same way, by not filing, never filing, your tax return, on time, and IRS gets it, uh, because it takes like 4 years, 3 years, 4 years without filing and nothing happens. They feel comfortable to keep, doing not filing. It has the same consequence. The consequence is, first of all, sometimes if the IRS, you know, pursue to sue you, the tax evasion is a crime.
mm,
The IRS may not go after you because it has also a time limit. It has to be done within 6 years, from the time that the tax was the tax due date. Then, you may not find a lot of people being sued as a crime, but they can. You have to pay your tax within 10 years. You have to file it and pay it within 10 years. IRS can come and ask you or do something within 10 years. That is a long time to wait. So it has also that effect. If you are not fighting, you are subject to penalties, interest, and I'm telling you, even being sued as a crime.
so to be clear, that time limit is it 6 years or 10 years?
6 years is for to be sued as a crime, a tax related crime. If IRS
Oh,
do you within the last 6 years, they lose that one.
so to be
But
clear, that time
collection
limit is it six
and
years or
to collect their money, it is 10 years. They can ask any time within that 10 years to file. If you don't file, there are some different ways of doing. IRS can actually do, the tax based on the information that they have, like on 1099, W2s, all other things. They calculate in their own way and ask you, to pay that amount plus penalty plus interest, based on their own calculation. The problem with that is you will not get a chance to present, the deductions,
wow?
all the things, because they just calculate it. That is called a substitute, tax return. They do it on their own and they claim the money.
Wow. Okay,
So,
well,
bad.
shoot, I'm like, oh, well, my taxes are like more complicated now. It was a little complicated before, but I mean, the fees got ridiculous. I figured it out on my own. But now I have business income, employment income, just, things are just getting meshed. So I need a professional. So again, quick shameless plug because these tax fees, listen, I want all as much as I can get on my return as possible. So a lot of these tax offices then got a little out of control tapping into that, tapping into my return. So thank you, Pastor Tati, for keeping your fees reasonable, and allowing us to still be safe among from the IRS without necessarily taking a big chunk of our pot. So shout out to ETF and Associates Tax and Accounting for still doing fair fees in 2023 amongst inflation. Big ups to you.
Yeah. Don't wait until you get the assessment or any letter from IRS. Even if you do, you know, you can fix it. You can go back and file and fix it. You can compromise with IRS. As I say, ignoring it, especially if you get a letter, don't ignore it. When you get assessment letter, um, the money that they put there is way high.
Yeah.
Sometimes they just say put the money based on the documents they have, and they send you assessment letter, pay this amount. So go back and they give you a chance to do your own tax return and present it. And that way you will cut a lot of money, interest and penalties.
Wow.
And before the due date. And or you can go to you can file a petition. And people don't file their taxes for different reasons. Sometimes they get sick for years, and but still IRS doesn't know what the problem is. So you can also write a petition, and but that has to be within 90 days after you get that letter.
Oh, 90 days. Wow. Okay,
90 days.
well, that's good to know. That's important. So I want to kind of shift gears and talk a bit about accounting for freelancers, solopreneurs. What are some pointers that you can give them for people who they sell on Etsy or Uber or do DoorDash, stuff like that? What are some things that we can do for them?
Well,
I'm sorry.
their business is also just like any small business. They file Schedule C, and they have to record their income. And that one is what makes it hard is they have to record their own income. They may not, like if you do over is going to send you the statement how much you work for them, because they also get out their fees. But if you other than if you work side business other which doesn't have a freelancer, you may do a website development or any other advertising, could be anything. You get money here and money here and there. Mm-hmm. It's not one source. It's not. It may not be even a major source. So you have to keep your own. You have to write. You have to have a good accounting system or record of your income. At the same time, your business. Your expenses. So. Because you have to also to put to open account with IRS and save some money for your future tax. That will be deposited with IRS when you prepare your tax. That is going to be deducted, or that's going to apply to your tax liability. If it is over, you get it as a refund. If it is under, you pay the difference. So that is one good practice that I advise to freelancers. Other than that, it is treated as any regular business, because the return is going to be filed on the schedule C. So you need your income and all your expenses.
Mm-hmm.
At the same time, like any other business, you can use your home and separated place, and you can work from home. Most of them they work from home. At least the ones that I know. So
That's right.
all that expenses goes to offset the income.
Okay. And I know now, like I'm pretty sure the government. I've heard the headlines of it. I didn't follow the story, but they basically are trying to, if they haven't already, have closed the COVID era for the United States. So uh, I know a lot of the deductions and the credits that they offered at that time. They're no longer offered now. Do you know? Do you know? Do you have any updates on that? On what's actually going on?
Yes, last year, 21, there was, I mean, last year, when I said last year, I'm talking about 21, part of 20, during the COVID era, there were a lot of, you know, payments help from the government, so COVID, programs, all kinds of things. And in 21, there were help for child care, I mean, the child tax credits. But this year, none of that. Like, everything went back to where it was before that, before COVID. So uh, there are not credits that was given to businesses, all the other things. So things are going to where it was before. So we have to expect this. IRAs have been, you know, giving all kinds of information that things are going back. No more, no more credits for that. So when it comes to earned income credit, it went back to where it was for. Okay, let me try to get the chart. Child tax credit itself, which was like 3,600 for per child, who are less than 17 years old. But now that is not there. We're back to 2000, 2000, which was, the child tax credit before. And the 3,600, which we had in 2021, was based on the number of children. But now it is going to be up and down by the amount of money that you make.
Mm.
So it went back to 2000, and the amount also went, the limit also went for a single filer, it's I think 75 for filing jointly is 150. Yeah, I think it's 150,000. I'm not sure, but it went back to where it was before. The same thing with it also went back to where it was before. Now, uh, for a single parent, two children earning 15,000, they receive child tax credit up to 1,875.
Wow.
But it was like 3,600 when there was, the 2021 now. Also, this is the funny thing in comparison. Single parent with two children earning 150 or married parents earning 400,000 would receive 4,000, which is 2,000 for
during those COVID times, would they still be able to collect at that credit level?
yes.
Wow.
If they go back and if they haven't filed, or didn't if they didn't do the right thing, like miscalculate or whatever, yes. But the thing is, 2021, the government was giving them every month. It was that
Oh.
month, so it's unlikely that somebody will miss that, and I don't know how that could happen. So there is a possibility that everybody does it.
Gotcha.
But yes.
Okay. So so there are some businesses that often pay taxes throughout the year. Um, is that a good practice to do? And how would I, as a business owner, pay my, like, how do I know what I'm supposed to pay throughout the year?
Well, you set um, a deposit account with IRS, and there is a form to be filled out the money for this year.
Mhm.
So that is a good practice. And also, instead of paying, have the burden one time, it is better to save it over the 12 months, even quarterly. That is a good practice, to put some money aside. And I have people who argue, why do I put my money IRS, while I can earn at least interest on my on my money? Well, you can do that, but it's a good practice. For a lot of us, we don't want to be tax liability, big amount that at one time. And also, it is safe, because at the end of the day, at the end of the year, when you prepare your tax return, if it is over, they will refund you.
Hmm. But how do I calculate it? How do I know what I'm supposed to send?
Well, what I recommend is, based on, this is my recommendation, what I think my clients, based on last year, tax return, how much did you pay? And add like maybe 20%, you anticipate, how much you anticipate that your income will grow. And based on that, take last year, at least it is your first year business. If it is first year business, that's a different story. But based on last year, add 10%, 20%, and save it, send it.
Gotcha. And if you overpay, they'll give you money back. Is that how that works?
Yeah.
Okay.
If you don't have even a tax liability for that year, they'll go for it.
Okay. Can you tell us a little bit about what are employment taxes, and like how do we know as a business if we're supposed to be paying employment tax?
Well, when you prepare the payroll tax, the payroll, on the payroll tax, there is a federal unemployment and there is unemployment tax. There are two of them. So, pay for that and you send it to IRS. Then, they put there is they will let you know, or you ask. I don't know how that works, but as long as you send the unemployment tax from the employees every payroll period, then when they, if you the layoff, they can claim it immediately. You run payroll, which is a good thing, for businesses. At the same time, you want to protect your employees, to have some amount of money until they get another job. And it's not that much. I don't remember the percentage, but it's not that much that you pay on a payroll, on a, per payroll. But when they are off, they get that money.
Okay. Okay, so guys, we're gonna switch gears because I told you this always my international teachers that just has all the answers. They know their stuff. So thank you so much, Miss Tati. You've been amazing. You have really shed some light on a lot of confusing topics, especially for us who would be smaller business owners, new to business, and of course, as any business owner, we want to be successful. And one of the major losses businesses have is their finances aren't in order. Their taxes aren't done correctly. They don't maintain their registration, and so then they default by either or. To switch gears a little bit and talk about bookkeeping. I know you're the queen of bookkeeping as well, so I gotta kind of get in there because it is those bookkeeping practices that helps us to prepare for tax season. Are there some recommendations that you can give us our finances in order that would make someone like make your life easier when we come for during tax season?
Yes. Well, to start with, you know, you can find good tax return, and I understand will come after you if you keep a proper, bookkeeping. It starts to keeping all your documentations, like all the receipts, all the invoices, and when you get paid, if you are giving out a receipt, that's good. That's also one of the documents. Or if you are everything that you pay, I can tell you this: it adds up. Before at the end of the year, so people say, I don't know where the money went. I didn't do all this, money. I didn't get all this money because it adds up. You may not feel like you make that much money, but that's how that it adds up. And the same thing with expenses. So whether you are using, it's good to use proper accounting, so that even if you have a ledger that you write your income, your expenses. If you are not an accountant, you just know how to do the profit and loss, the balance sheet. When you go to your tax preparer, they need a balance sheet, they need the income statement, to clear the business, and even to do like some of the expenses, which is very very essential to your tax, but you don't know. Keep it like car expense, transportation expense is one of the big ones. But if you have to keep at least the mileage at the beginning of the year, write the mileage on your car. At the end of the year, write the mileage on your car. Even if you have to estimate, you can make a good estimate, between the business and the personal. If you are using one car for business and personal, maybe you can get 56 cents per mile.
Mm.
So that is a good thing. And keep like if you have a business card, or if you are using your car for business, like car wash, you just take $60, $70, pay, and you forget that. Make it times 12 if you get to your car wash once a month. So like fuel, maintenance, repair, all those things. Keep the receipt, and also if you are using QuickBooks, record it. If you have the receipt, even if you do recording once in 2 weeks, as long as you have the receipt, you don't forget it. So that is what that you may feel like I hire an accountant, or this is going to be very expensive. This is but the tax that you save at the end of the year may not be, as such, a lot, that may write off the expense that you pay for your accountant. You know that you have proper, everything is properly recorded, and things that you don't know that you professional may know, like depreciation. Some people they use their laptop and they don't record it, they don't claim it, but it has to be claimed. And there are so many things that you need to claim and to be recorded. And if that is the case, you will not worry about quality.
So
You
if I
know,
don't have my
the
receipts, what can I do?
record it.
Okay.
You have to record it.
Will
You
bank
know,
statements work in place of receipts?
and also, it is advisable to separate the business and the business account, bank account, from the personal.
Mm.
Like there are so many credit unions where you don't pay even a fee. The checking fee. Go in the open a separate account for your business, so that you'll not go through the hassle of this is for business, this is for personal, going through separating. So it is better to separate your business from your personal, and keep the bank statement every month. And based on that, when you record, check, reconcile whatever is in the bank. Like when you use your debit card, you may not even take the receipt. You may not even keep the receipt. So as long as you have it on the bank statement, you can record it, and that is also the record.
So I'm very curious because I know most people they know that it's better to keep it separate, but most, especially when they're first starting out that first year, that's a discipline that you underestimate. It really requires commitment. So what is your recommendation for those that has mixed both? They mix their personal accounts and their business accounts.
Okay.
What now?
Yeah, even if you mix, you have to do one of the two. If you keep your receipts, like let's say by monthly, you have all your receipts. Then when we try to record, get your receipt and get your bank statement. And if you don't know that is for personal or for business, you have your receipt. I don't care if you keep your personal, but keep the business receipts. Then you can easily separate which one is business, which one. Most of my clients, I have one right here. They give me their bank statements, writing by the side. This is for this. This is for this. This is for this. Then I wish if they didn't mix it, but they have mixed it. So I have to separate. I go by what they tell me.
Mm.
I don't know, how they spend, why they spend it, but they tell me this is for Compass. So I write it. This is business Compass. This is personal Compass. So I know, and I encourage the business as business. So don't fail to keep your receipts.
Okay.
And if you don't have it, and also periodically, maybe once in 2 weeks, print your bank statement at least once a month. Go over it and write, what that is for. Because I can record from the bank statement.
Mm-hmm.
So, that is, the basic thing. If you don't record it, if you don't remember it, then, your expenses. And but losing an expense means a lot of tax liability. The income is not going to be much. And instead spend, then you pay tax.
Wow.
But when you pay tax, it's not only like when you are employed for an Security and Medicare. But here you are on your own. You pay 100% your Social Security and your Medicare. So you have to think that tax is high for small business owners and freelancers.
Okay. Okay, so I have one more question for you. I do want to honor your time. I know it's tax season, so just by you taking the time to do this with me, it really means a lot. Words really couldn't express my gratitude, but I gotta ask for the partners that are in business. Their tax preparations, I imagine, process is different from those who only have one owner for their business. So, can you talk a little bit about partners that are in business? What are things that they can do, or what are ways that they can prepare their taxes, and they can be compliant with the IRS?
Say that again. I'm sorry.
Partners that are in business, how are ways that they can prepare their taxes? What are some pointers that you can give partners in business so that they can remain compliant with the IRS?
Partners in businesses.
Mm-hmm.
That's mean they are under partnership.
Mm-hmm.
There is partnership. Okay. Well, for partners, it is different. There is another form that has to be prepared um, because they are partners. That is, their income. And then, there is a K1 statement that you receive as you receive 1099 or W2s. That K1 is all the income and all the expenses for the business. And whatever loss or profit that you make at the end of the day, that will be reported on K1.
Mm.
Then you take that K1 as to prepare your tax return. That is your income.
Or your
And
loss.
uh,
Your income or your loss.
for income or your loss, the loss for you. And also the same, like if it is 50-50 partnership, you are going to get 50% of the income or the loss, and the partner gets 50%. Based on your partnership ratio, you are going to get K1. That K1 is just like K99. That is an information for your income or loss.
Gotcha.
If you have other, like if you are employed or, some other income, then you take that one and add it to your 1040.
1040.
Yeah.
What's the
So,
1040?
yeah, you have to, because you are preparing your personal return, your tax return, the 1040. So that K1 is going to serve as your portion of income. That's your income.
Mm. And then your personal taxes go on the 1040.
Yeah, your personal tax is reported under 1040.
Oh.
For business, for like small business LLC or sole proprietor, if you are only one owner, that will be included under, the business part will be done under Schedule C and included as income with the rest of your income. You have pension, if you have W2s or any other income that will be included there as other income and be calculated under 1040. But like for corporation and partnership is different. There has to be the business part is going to be done different and a different form. And then you get K1.
Gotcha. Okay. And I know I said that was the last question, but one more.
Okay.
I want to ask for the nonprofits. I can't forget about them because before you said if a business does business with another vendor over 600, they should be sending them a 1099. But if you are a nonprofit and you get donations, do you send a 1099 as well, or what do you do then?
Well, using a statement, like if I do contribution,
Mm-hmm.
that is charitable contribution, and I get a statement saying, okay, Rebecca has, contributed this much money for this organization. That is that will have my EIN number.
Mm-hmm.
So you can file with, you file with personal tax, you can claim that charitable contribution based on that, on the tax software. It has a place where to put that EIN number.
Mm-hmm.
That shows that is a legitimate contribution that you are claiming.
So do you put the
So,
nonprofit EIN number or do you put the
yeah, the
business?
non-profit,
Oh, I
the
see. I see.
yeah.
Okay.
So that that helps, the the charity, the donor, to claim that expense. That's why you hear that a lot. Is people are looking for one seat before they give you money. That's what they ask, and when say yes, they know that they're gonna get statements.
Okay. Okay, that's all the questions that I have. Thank you so much, Tatty. I really appreciate it. I feel like I covered as much as I possibly could. I really hope that I answered all the questions that anyone who has a business would ask an accountant. But I mean, if not, we're gonna definitely include your contact information. I highly recommend Miss Tati Yadete for to be your a business accountant because as you can see she's been doing this for so long. She knows a lot about it and knows what to do in just about any situation or scenario. So again, thank you, Tati, for being here. And oh, and she has a special, guys. If anyone who is wanting to get their personal or business taxes done, she has a special that she is offering the small fee of 129 to get your taxes done. Come on, like thank you for doing that for our viewers and our listeners. Thank you so much.
Thank you so much.
Okay, so
And
I'll let you get back to it. I know you got some number crunching to get to, so
yeah. Well, one last thing that I would encourage everybody is,
please.
it doesn't matter how messed up your accounting or your tax situation is, don't just let it go, without fixing it. It will be fixed. And have been, helping a lot of clients, fixing their situation because I know the accounting part as well as the tax part. So even if you haven't recorded or you haven't done anything with your tax thing or with your accounting, come and let us talk. We'll find a solution. There is a solution.
I love
Thank
it.
you.
This is why she is here. This is why she was chosen for the part. This is awesome. All right, happy Saturday, Tati. Have a great day.
Thank, thank you. Thank you so much.
All right, y'all. There you have it. Everything business tax 2023. Listen, I know there has been some changes in the tax division, and I mean, I tried to get down to the nitty gritty. I really think we did. I mean, she really gave me some insight in things that I didn't even know, and I thought I knew a lot. In my undergrad, we took 4 levels of accounting, so they covered a lot. But accounting is very different from tax, and she really has really enlightened us in some things. But I would highly encourage you not to just take it on yourself. There is a soldier on the sidelines waiting to support you, waiting to help you, who can fix just about any accounting situation, as she mentioned. And so I encourage that you reach out to her. Like I said, we're going to have her contact information in the chat and also in the description box. So, hey, we're in Florida, but as you know, just about anywhere that anywhere in the United States, she can help. She can send your documentations digitally. You can call. You can ask questions, and she just has a warm heart. You'll still come to find that she is a very reliable source when it comes to accounting here. specifically in Florida. So thank you all for tuning in. Thank you for watching. If you have questions, you're more than welcome to drop them in the chat. I'll send you an email or just respond back. And stay tuned for the next episode. We have more great things in the Leadership Institute of Florida coming up. Bye-bye. She is a very reliable source when it comes to accounting here, specifically.